Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock, with news that how China and the EU separately react to issues facing them will set the tone this week. Markets will open on tenterhooks later today, after Wall Street was down 4.9% last week and Shanghai was down 5.8%. The NZX was down 4%. Bond market yields fell after the US Treasury 10-year rose to 3.23% at the start of last week and ended lower at 3.17%, as doubts started to appear about the sustainability of higher rates. But surprising everyone over the weekend was Chinese export performance. For the fifth consecutive month, where markets were expecting to see sharp declines from the effects of the trade war and rising tariffs, they have defied expectations and risen. In September, they were up almost 15%, and the country's trade gap with the US hit a fresh high of $34 billion in the month. More American tariffs are on the way, but so far the ones imposed only seem to have juiced up the trade between the two countries. It's a trend full of irony and quite unexpected. The rush to beat tariffs narrative can't go on forever. On the other hand, Chinese imports fell 14%, reflecting subdued domestic demand. However, car sales in China fell for the third straight month of September, and it now looks like they'll have their first yearly decline in passenger car sales in almost 3 decades. Foreign manufacturers had a particularly rough month. And Europe could prove the centre of global market focus this week, as Italy's budget and Brexit talks overshadow economic data and central banks. Politicians are gathering to address the EU's biggest current challenges. History suggests that the world is about to face another financial crisis. One of the places it might start is Italy. Many of the ingredients are there: a pile of questionable debt, weak banks, an erratic government, and a sizable economy able to inflict collateral damage outside Italian borders. And its new unstable government might find an angry Germany fed up with all the challenges, only too ready to push it out of the EU. The EU is playing with matches again, confident they know what they're doing. In Australia, house prices are likely to slip further as the demand for new mortgages dries up. The number of new mortgages fell by a larger than expected 4.5% in August, to be down more than 10% over the year. It is the weakest result in almost 8 years, when the property market was still struggling in the aftermath of the GFC. US Treasury 10-year yield is slightly firmer at 3.17% today. Their 2-10 curve is at 31 basis points. The Aussie government 10-year is at 2.74%, the Chinese government 10-year is at 3.61%, and the New Zealand government 10-year is at 2.68%. New Zealand swap rates have risen a minor 3 basis points across the curve over the past week. And gold is at $1,218 an ounce. That puts it up $17 for the week. US oil prices are little changed today at just under $71.50 a barrel. The Brent benchmark is now just under $80.50 a barrel. But both are large pullbacks from this time last week. And the Kiwi dollar is starting the week little changed at 65 US cents. But that's up 60 basis points over the past 7 days. On the cross rates were little change as well at 91.4 Aussie cents and little change at 56.2 Euro cents. That puts the TWI at 69, but that's a good weekly gain. I'm David Chaston. That's 90 at 9, brought to you by interest.co.nz.